Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price was on the rise ahead of this week's U.S. Federal Reserve meeting, approaching the 1960 per ounce level prior to the central bank's update. Market participants have been debating whether the Fed would hike again or leave rates unchanged, and ultimately those in the second camp ended up being correct. The Fed kept the target range for its benchmark borrowing rate steady at 5 to 5.25%. According to a statement from the Fed, this move will allow it to assess additional information and its implications for monetary policy. An update to the Fed's dot plot, which shows where each Fed official thinks the federal funds rate is going, suggests that 2 more rate hikes of 25 basis points each are still in the cards. The central bank has already hiked further and longer than many people thought it would or could, and we'll be watching closely to see what happens at the next Fed meeting, scheduled to run from July 25th to 26th. Peter Grandich of Peter Grandich & Company recently told me that at this point he doesn't expect a cut at any point this year. As we wrap up, I want to take a moment to share some insights from my recent interview with McEwen of McEwen Mining. When asked if gold is just taking a breather before it takes off again, he said yes. Here's why he thinks that's the case.
I don't see us getting out from under the burden of debt that governments and corporations have incurred in massive quantity. And then the monetary stimulation, there's still the world awash in liquidity. And people are looking, well, where do I put my money? You're seeing central banks, and a lot of them are part of that BRIC group that Russia and China have been putting together, have been buying gold. And they've been buying them with the dollars they held in their reserves. So I think you're going to see more of that happening. There's going to be more turbulence in the currency market as we go forward. The petrodollar won't be as strong as it used to be. And if the dollar is declining, then the price of commodities and gold will go up, and we'll see continued inflation.
Rob also spoke about how gold stocks are performing right now, reminding investors that the summer months tend to be a slow period. Let's listen to his advice.
I'd say don't get disheartened. This is a space you want to be in. Usually happens right after the PDAC. The gold stocks go down for a period, and then through the summer, they wander around, not really getting too excited. But come September, they take off again. So now's the time to accumulate rather than bemoan the fact it's down.
I'll leave the link to the full interview below. It also includes commentary from Michael Metting of McEwen Copper, so I definitely encourage you to check it out if you're interested in the dynamics for either the gold or copper markets. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our report or any article mentioned in this video. We'll see you next time.